Good morning. Welcome to Boardroom Media. We're joined once again by the CEO of XM, Peter McGuire, for the XM.com weekly market update. Pete, welcome back.
Good morning, Andrew.
Plenty of activity again on the markets. We'll start domestically once again. First of all, we'll touch on the labour market, and the slide that we show here it gives a really good sense of a very tight labour market. Obviously, we know the unemployment rate is around that sort of 3.5%, but the chart also shows wages starting to sort of creep up a little bit as well, which is good for some people, but something to keep an eye on.
Absolutely. Well, it's not. You'd have to say it wouldn't be unusual for wages to have to creep up, considering where we've got inflation and the cost of fuel and the cost of utilities and everything else. So you either get it in a pay rise, or if you don't get it, then it's costing you significantly to actually stay liquid.
Without doubt, and I think a lot of people have been talking that the wages have to rise at some point in time, so we're actually starting to see that now.
Yes.
Will that continue to take place over the next few months? Time will tell, but yeah, pretty tight labour market there. So, as we've said before,
it's a war for capital and a war for talent.
Very much so, and as we've said before, if you want a job, you can get one, no doubt about that. So, onto the Aussie dollar. Once again, we've seen it strengthen a little bit recently, which is good. So now trading above that 70 cent mark, which it hasn't done for a few months.
Yeah, I noticed 71.40 yesterday, and then it tipped off, and that US dollar's strengthened a little bit overnight. But yes, when you're looking at that chart, take it back to February, March, or even the start of the year. It's just been, if you only traded one market, the Aussie dollar was just electric, and it never disappoints.
Plenty of movement there. So will it be able to hold those levels? I think it's probably more that the US has probably weakened slightly rather than anything domestically, which has pushed it up. And obviously, we've still got those interest rate differentials where will the RBA keep pace with the Fed?
Well, that's right, and I think we've got off the cab rank this week. We've got the RBNZ, and so whether we're going to follow our neighbours across the ditch.
Very much so, and that's the next slide shows this, where the anticipation is for a 50-point rise, which would take it up to 3%, which is one of the higher rates sort of globally at the moment in the developed countries.
Yes.
So that'll be interesting to see where that goes. They have speculated that they want to get it back to 4% at some point in the future, but we are starting to see a little bit of slowdown in New Zealand.
Oh, very much so across property and so on. But what's very interesting, it'd be 7 consecutive months of rises, if they hit the ball out of the park tomorrow. So let's just see how it all rolls. But yeah, they're very aggressive,
and they seem to be a little bit more ahead of the curve than some of the other central banks globally. So, but
possibly the RBA.
Yeah, and I think it's obviously starting to sort of show within the economy there. The next slide shows that as well. We look at the New Zealand consumer confidence. That's come off significantly just in the last couple of months.
Yes, exactly, and where it's going to be over this next quarter, anything under 80, you put your mind back there, you've got to go a long way back to get anywhere near there, and I would say probably around about 14, 15, 16 would have been the years. It'd be an interesting chart to look at over the last 20 years and how it performed in the times of like the GFC.
And that you look at those numbers there, it's been a very solid, I know it's only going back to sort of mid-2019, but very solid numbers there.
Yeah.
But obviously the last one at 78.7, it's a significant drop. So, and obviously that's the interest rates coming into play. Now let's touch on some of the commodities. They are obviously starting to come off a bit, which plays into the whole inflation story. Crude now around that $90 mark.
Yeah, WTI, we even around about that 88, I wouldn't be surprised for it to edge a little bit lower, but it's incredibly volatile. You can be, sometimes I might be talking and it's 80, let's say $91, $92, and then you come back in 2 hours' time, you haven't seen a chart, it's up $1. And then all of a sudden it dips another $1.50. So it's incredibly volatile, and over the last 2 months it's been an almighty market to short, as demonstrated there.
Yeah, and that's off nearly 25% from its highs sort of earlier this year. So, and we're actually, as consumers, we're seeing that at the petrol pump now. The prices are significantly lower than what they were, thankfully. Another commodity which is very important is obviously copper, which is used in a lot of things. So
all the building inputs, and it's a wonderful barometer as far as global economic growth. That's $3.75, well, whatever it is, but it's $3.75 per pound, and that's traded on COMEX. I also use when I talk about copper, it's in a conversion, $8,000 a metric tonne. It's just on that at the moment. That's traded on the London Metal Exchange. So yes, copper, same graph, but it just demonstrates the huge sell-off that we've seen from that $11,000 a metric tonne, or there, $4.75 to $3.25, and it bounced. So yeah, possibly it was oversold, and we're seeing that little bit of retracement. We also saw a very big sell-off in aluminium, lead, nickel, tin. So yeah, all the base metals got hammered.
Yeah, it's a fairly consistent story there as well across those commodities. The last one I wanted to touch on, something a little bit different, lumber. When we talk about building, supply chain issues, plenty of delays there. Once again, the chart tells the story.
Yeah, I used to go to the Chicago Mercantile Exchange on WACA in Chicago, and it was a big contract, in different times of the year naturally, but stud lumber, there it is, and that's had a massive sell-off, $14.25 a pound down to $6, so yeah, or 600 cents. It just shows structural weakness, and that's all about demand and what we're seeing there across the US property sector, and people buying homes and building and renovation. So a lot cheaper to do it at the moment than what it was going back 6 months ago.
Yeah, very much so. But it's interesting. I think once again the story out of the US is that we're starting to see the consumers just rein things in a little bit, because it's been very buoyant for a long time. It sort of plays into this chart as well, the retail sales. The numbers are coming out shortly.
We got those out this week.
Yeah, anticipating a slight rise, but pretty much flat.
Yeah, pretty much flat. I'm not looking for any real surprises. Well, it could surprise to the downside, so it may be more underwhelming than what we anticipate. So this week's a big, I think we wrote, plethora of data. So there's a heap of it coming out. We've got UK inflation, we've got these guys' retail sales. I know that we've got Philadelphia and New York industrial, and we've got the manufacturing index coming out as well. So it's a very big 48 hours of data release. Yeah,
it seems to be the same thing every week, doesn't it? Just data after data, particularly in sort of volatile times. You really take notice of it a lot more than what you may do normally. Finally, not a flash chart at all. The UK, we look at over a long period of time, you've got the CPI up, retail sales down.
Yeah, well, that's exactly it. We're at 9.6 or 9.7%, I think, for the UK as far as inflation. So when's it hit double figures? It could be there by now. Yeah. And what impact that has, as you mentioned, retail sales, so consumer confidence, all of those points. It's going to be a very interesting next 6 months. Yeah,
it certainly is. And obviously you've got the leadership change as well.
Have they got a leader yet?
I don't think they have they? Are they down
to... It was a bit cheeky of me to even ask.
No, well, are they down to be honest, I haven't looked at it. Are they down to the final two? Is one being
selected? Thought they were, and then it just seems to just drag on.
Seems to have gone quiet, hasn't it?
Yeah, Boris threw the towel in, 6 weeks ago?
I know. Well, they always said it was going to be a long process. But anyway,
certainly, it might be as long as Brexit.
Yeah, so once again, uncertainty is not ideal for these markets. So, but once again, that's the wrap this week. Thanks for joining us.
Thank you again.
We'll regroup again next week.
Yeah, take care.
Okay, that's Boardroom Media, and that's been the XM.com weekly market update.